Welcome back to the Worldwise Wealth Podcast. In today's episode, I sit down with MC Laubscher. This episode is quite insightful. He is an investor and he helps clients from around the globe to not only invest but to multiply their money. So, in this episode, we go through various strategies that he himself has implemented and that he walks clients through. But we also talk about the aspect of infinite banking, what this means, and how you can keep your money and your funds in your family office and have that continuing to work for you and your family for generations to come instead of having to go to a traditional bank. With that, let's dive into today's episode. Please share a little bit more about your story, your journey, what that has looked like, and how you've gotten to where you are today.
Yeah, thank you so much for having me. I've been looking forward to our conversation. So, I'm originally from South Africa, so I grew up during a very interesting part in South Africa's history. I was a young man when the government changed completely from the apartheid regime. I remember, Nelson Mandela being released from prison, to then having elections. A new form of government was formed, and the reason why I share this is, it was actually a gift on my journey now that I look back, because as a young man, I saw what uncertainty looks like, doubt, fear, and how, we were all familiar with this concept of the madness of crowds, right? I got to see it firsthand. So when I saw in 2020, people in the United States fighting over toilet paper, at checkout counters or in stores, I was not surprised at all, because I witnessed all of this stuff as a young man. And this is, as a business owner or investor, it served me very, very well, that experience. I also realized that there's a lot of different narratives and a lot of different viewpoints and angles. So it has really led me to become a seeker of truth, I guess, a truth seeker, which has helped me a lot in finance and investing and so forth. So I traveled quite a bit, and I ended up in the United States in 2001. I played sports there up until 2007. So I ended up there with a backpack, couple of $100, a suitcase, a sense of humor, a sense of adventure. And I always had a very big interest in history and economics. So as I was traveling for sports on the team bus and the team plane, I was that guy reading books about business and investing. At that time, I came across Robert Kiyosaki's Rich Dad Poor Dad, which was a complete game changer for me. I took action, bought real estate within 6 months of reading the book. Um, and I put some tenants in the building. They paid the rent, I paid the bills, there was money left over, and I'm like, wow, cash flow, just like in the book. This is amazing. How many times can I do this? And then of course school starts, right? But so my strategy kind of was, as an investor, to build this life to retire to when I was done with pursuing a career in athletics. So I just took some of the money that I was making from athletics and sports, and then also just odd kind of random jobs kind of stuff, and I would just buy real estate with it. Um, and yeah, that led me to many different avenues. Started meeting really, really interesting people. I also read Rich Dad Poor Dad every single year, the book still. I've been doing that for 25 years. Sometimes you don't have to read all the books in the world. You have to read a couple of books a lot of times, the good ones. When the student is ready, the teacher appears. And I think it was about the fourth or the fifth time that I read this, that I started to see the simplified financial statements that he had, that all of the liabilities that you have are assets of the bank. And I'm like, wow, these banks really have this stuff figured out. They've really got a pretty good system, where capital's always flowing to them. And if you think about it, with banks, whether you deposit money into a checking, a savings, whether you spend it, whether you borrow money to spend or to invest, they make money. It's a pretty good system. They got it figured out pretty well. Then I came across the work of Nelson Nash, who wrote the book Becoming Your Own Banker. And Nelson said, just to add on this powerful system, that you always have to be in two businesses in life. The business that you're in, maybe you have a business that provides a service or a product, and the banking business. You have to be in both of those. Um, I was also then introduced to, through someone in my network, my sports network, that came from a very wealthy family. I didn't know that at that point. He was just a real estate investor. So we were just talking, and he's like, "Oh, you're interested in real estate?" I'm like, "I actually bought some," And as a 20, 21, 22-year-old kid, he was like, "Oh, so you actually take action." So we developed a friendship. I realized he came from a very, very wealthy family, third, fourth generation legacy family, and they had a structure which now everybody refers to as a family office structure. So they had operating businesses. They have a system, a banking system within this family office structure, and then they would leverage that banking system to buy multifamily real estate and grow and scale real estate. So that was a mind opener for me. And at that time, I integrated everything that I learned from him into my own life. So I set up, infinite banking for myself and my real estate businesses that really did just put some rocket fuel onto what I was already doing with my real estate business. And then I started a business called Producers Wealth 10 years ago that we actually help business owners and investors across the United States and all 50 states and Washington, D.C., which is a district, I guess, um, to implement and execute this strategy, this infinite banking, and also business planning and family planning. And then in 9 years ago, I started a show called Cashflow Ninja. And it came about me just interviewing, or just first, I was just having conversations with clients. And I couldn't believe how people were making money, the businesses that they have, and the things that they would invest in. I mean, from investing in, teak projects in Panama, all the way to, developments overseas, single family, multifamily real estate, mobile home parks, Airbnbs. I mean, the conversations that we had was just mind blowing, and I couldn't believe how many different ways people are making money and investing. And again, being that person that I love to learn, I'm curious, I'm a seeker of truth, like how the world really actually works and how business actually works, not just what's in the textbooks. Like, tell me, how does this actually work? And I started to interview them and record, and that Cashflow Ninja turned into something that I never could have imagined. We've been downloaded in 180 countries millions of times and have opened a lot of doors of meeting very, very interesting people. So, but that's what I'm up to today. So we talk, a lot about how to create your own banking system, your family banking system, family offices. And then also I continue to interview the best minds in business and investing on my show.
What a journey. That's amazing. I definitely want to, I have it bookmarked to talk to you about 9 years of podcasting. One of the OGs. That's wild. Before we go there, I want to talk about, I mean, let's first of all explain the concept of a family office and what that structure looks like. But from there, let's go into banking, infinite banking, and then I believe you also have investments, asset investing as well. We do a lot with banking, crypto-friendly banking options, on and off ramps. So a little bit different likely, but we're very big in the diversification space in terms of banking and having your money work for you in various different countries around the globe.
Awesome. Awesome. Yeah. So family offices is very, very interesting. It's been interesting to me for a while. I really started to deep dive into this and study it. And again, I was introduced to this 20 something years ago, and I didn't realize how powerful that whole sector is and what's going on. So to set the table for family offices, so what's a family office? A family office is kind of like a private wealth management firm that manages the wealth of a particular family, very wealthy families. So you have different kind of types of family offices, but I think the fundamental thing to know is it's a wealth management firm with all the advisors under one roof. They're all on the same team managing a family's wealth. And what's interesting about the family office space? We live in a very interesting time right now. What's the Chinese proverb? Maybe we live in interesting times, but I don't. I think most people don't even see this coming. It's estimated 85 to 90 trillion dollars are about to exchange hands in the next 20 years. It is mind blowing. And then to add fuel to that, Ernest and Young just released a report on family offices. And in that report, it shared that the family office space, the wealth and capital inside of family offices, is bigger than private equity and venture capital combined. When I saw that, I was like, you got to be kidding me. Because if you think about it, right? The exciting thing for people to talk about is private equity. And then of course, Shark Tank made that cool, right? It's everybody wants to be a venture capitalist now after watching Shark Tank. So that's kind of the stuff that gets the sizzle, if you will, and the great cocktail party conversation. But the actual like where the actual capital on this planet is right now is family offices. So yeah, family offices, we what we do at Producers Wealth too is we talk about how to implement and execute a family office strategy for your family, because usually you start looking at families that get into family offices, around $50 million in net worth, right? And of course, the single family offices, the really big ones, is $100 million and up. Well, what do you do between 1 million and 50 million? There's a very underserved market right there. So what we do is we look at the structure that's there, and then how to set this up for your family, and then we educate and help folks with that. The principle that I always share with this family offices is that you don't have to be a Rockefeller to do what the Rockefellers do. You could do the exact same stuff on a smaller scale, and it's going to make incredible changes within the life and the trajectory of wealth for your family and future generations of your family. So we talk about five pieces of the family office. So the first part is the legacy piece, and the legacy kind of like document. So the legacy assets of a family is the family's statement of purpose, which, if you think about it, it's like the Declaration of Independence in the United States. It's the why. Why did you declare independence from Great Britain? Why do you want to set this up? The second piece is the family constitution. It's the how. So that includes like your family values, what the family stand for, who they are, what they stand against, what they don't want to see happening in the world, what they do want to see. So it's the guiding kind of document for the family and for future generations. So to have that codified, think about it, 2, 3, 4 generations from now, we'll know this is why our great grandparents set this up, and this is basically how we're going to operate this. What also ties into, you can create your own family crest. Now, a lot of us we're all good mutts these days in the West, right? So I'm an Afrikaner, a Boer, so I'm from like French, German, and Dutch descent, so a really good mutt. But you can look up your family crest with your last name, and most European families have them. But you can also, the cooler thing is to create your own. And a lot of these families do that. And that the family crest, the coat of arms, can include your family values in there. The other thing is to open up a legacy library of podcasts, articles, videos. Think about it this way. Um, your grandparents, like if I just think of my grandparents, like my grandmother, which is like almost 100, she grew up in the middle of South Africa, 13 years old, going to school on a horse, heavily armed. Like that was their life. That like the lives that they had, completely different than our lives, right? But some pretty cool stuff. There's great story. You can capture all of that stuff and leave that for future generations. Family heirlooms. That everything has a story. And the reason why this is important is this is the non-financial stuff, but this is the glue of the family. Families that share common values, that have family stories. It's the same thing of like, if you think about it in the corporate world, how a logo can even unite someone, or a brand, and the story of the company, and the history, and the this and the that. It's same thing with your family. But anyway, that's all under your legacy assets. This, by the way, is one of the hardest part in this whole thing. The second piece is the easy part, the tax, legal, and insurance structures. And that's just basically, again, asset protection, estate planning, insurance protections for the family business, the family members, all that kind of stuff, right? To make sure that they're bulletproof from creditors, predators, and so forth. The third piece, which is the piece that you were referring to, is the family bank. The family bank, and this is where infinite banking comes in. I'd mentioned on my journey, I learned that, banks, whether you deposit money, whether you save it, spend it, just leave it there, or borrow to spend or invest, banks make money. You could set this vehicle up for your family the exact same way. So, and obviously, this is a life insurance strategy where you're using a very specific type of life insurance policy, dividend paying whole life insurance policy with a mutual life insurance carrier to warehouse capital in, because the money is guaranteed. It's guaranteed to grow, tax free. It's set up with companies that have paid dividends, which is around 6% now for 170 years consecutively. You can also place the cash value inside of that policy as collateral for loans to the family, which this is the banking mechanism. And then it has a death benefit, which then produces the waterfall, which I'll get to. They call it the Rockefeller method, which contractually multiplies wealth with each and every generation. So, how the banking works, and I'll just give you a quick rundown on that for folks that are not familiar with this. I had a mentor, this is 20 years ago, shared with me in the 70s. They would actually deposit money in a CD in a bank. I know if you're listening to this, you're probably falling off your chair or tripping, and maybe you don't even know what a CD is, the certificate of deposit. But they would put money in there because they were paying double digits returns, interest. So he would take $100,000 and put it in a bank and get 10% on that, which sounds crazy, but that's what happened in the 70s. He would then go back to that exact same bank and say, Mr. or Mrs. Banker, can I get a loan secured by that $100,000? And the banker would say, well, of course you can. We'll give you a loan, 90% of the value of your CD at 8 or 9%. Well, why would it give a lower rate of interest just on that loan? Because of the type of collateral that it is. The collateral is that CD, that savings in the bank with them. It's not real estate where if you default on real estate, they have to take it back, sell it at a discount. So that's why your HELOC rates today are pretty much higher too than a lot of your insurance borrowing rates. But anyway, so he had that $100,000 in there, getting 10% on that every single year. He would get a loan at 90%. So you would get $90,000 at like 8%, go buy real estate, get a property that cash flows, let's just say $500 a month, and pay that loan back. So now he has a CD that is every single year earning 10%, and he has a loan secured by that CD. So your money's doing different things simultaneously. So what you're doing with life insurance is exactly the same thing. It's only better because you don't have to pay taxes on the growth ever. And when you get a loan secured by your life insurance, you never touch the money. So you get uninterrupted compounding growth of 6% inside of your policy. When you get a policy loan, just like he did with that CD, you could get up to 95% of your cash value in your policy. So if you had $100,000 in life insurance in your cash value, he would have gotten $95,000 at 5%, right? So it's pretty powerful stuff. And then you could use that money for the family, and you could use it for education. You could use it for buying real estate, to start a business, for investments, and more. And this is what that very wealthy friend of mine that I met did inside of his family office. They made money in the operating business. They put it all in life insurance contracts like this. And then they leveraged the life insurance contracts to buy real estate. And then the money from the real estate, they would just repay these loans back to the family bank in the middle of this. And the family bank with each and every generation is the profit center of the family. So you could do exactly what banks do with your family. I'll give you an example of what we just recently did with my family bank. So we have a family bank. I've been doing this for 20 years. My business needed money. So we borrowed the business, the money from our family bank. So it cost us 5% from the insurance company interest. Our loan, which was a private lending contract to my business, was for 10%. So on $100,000 that my company borrowed, which has been repaid with interest, The family bank got 110,000 back. So we repaid the loan, paid the insurance to five, and pocketed the other five. Um, so that's the family bank. And then I'll just talk about asset management quickly. Asset management is just how they look at family offices is how to invest for 100 years plus. How do you plant trees which you will never sit in the shade of is the philosophy, right? So for 100-year window, what are you going to invest in? Jim Rogers said on in my conversation with him when we were talking, MC, if you could only invest in five things your entire life, what would you invest in? And I'm like, that's a pretty good question. He goes, well, that's how I look at investments. That's why he's all in commodities, right? He picks like one. He's like literally like five things I've been all in my life. So that's kind of the asset management kind of like viewpoint. And I'm not going to get too technical about portfolio allocations and that kind of stuff, but it's just a philosophy. And then the final piece is the family mastermind, which comes from the Rothschilds, by the way. There's a book called The Five Men from Frankfurt, where the Rothschild family, the patriarch sent his sons to all the major centers of Europe, cities of Europe, to start Rothschild banking um, branches. And this family would get together every single year in what is called a family mastermind. And what they would do is they would review their statement of purpose, their family constitution, all the legacy docs, make sure everybody's in alignment, best practices, spend time together, enjoy each other's company, and just, hone all the bonds that already exist and grow the bonds. But yeah, those are the five pieces, and the family bank that's what we do and help people in all 50 states plus Washington, D.C. in the United States. Well, we help them set up infinite banking. And then the waterfall, just quickly, I forgot to share that. All that the waterfall is if you have parents setting up the life insurance contracts, you max out the death benefit on them. Let's just say, they have $10 million each. When they pass away, 20 million falls to the children. And let's just say you have four children. And that $20 million, because of the trust, all goes into life insurance contracts. When they pass away, there's probably 50 or 60 that falls to the grandchildren. And then from the grandchildren, there's about 100 million falling to the great grandchildren. So that's the Rockefeller waterfall effect that you could set up within this structure too. So I just want to make sure I covered that too.
We covered that was a lot of information. Thank you for sharing all that. Very interesting as a high level overview of what it is that you do and what these structures look like for a lot of your clients. So I just want to clarify we started talking about the over 50 or 100 million and then the under. So do these strategies work for both groups of family offices?
Yes. And this is something that if you have $1 million net worth, basically, you could do the exact same thing. So you don't have to be a Rockefeller to do what the Rockefellers do. So again, I met that friend of mine 20 something years ago when I literally had like one investment property and a couple of $1,000 in the bank. And I was like mind blown. I'm like, how would I ever do something like that? Well, I started small. I started with one infinite banking policy. And I started to like put a little bit of these things in place slowly but surely. Get your basic like legal stuff in place, basic tax stuff. And then you grow and you continue to grow and you add more. And before you know it, with this specific structure, 5 to 10 years from now, you would be in a completely different place financially. And the trajectory of your family's wealth for 10, 15, 20, 30 years, it's going to be exponential. It's going to be exponential. So you can implement this on a much smaller scale, even if you just have $1 million net worth. And even if, like I said, I didn't even have that when I started to think like this and implement these kind of structures.
And you know what I like about this too is I know your clients are US based, you work specifically within the US, but this is something that I guess it's dependent on the life insurance policies that are valid in certain countries and what the banking system looks. But I'm sure there are workarounds where you could do this in most Western countries, if not even some developing countries around the world.
Absolutely. And you can replace, so there are people that listen to this in different countries and they go, but they don't have those life insurance policies in Australia, MC, or New Zealand, because people have reached out to me from those countries, or South Africa, or England, or Germany. And I'm like, I know they don't have the same kind of insurance kind of structures there, but there's a way around it. This is a strategy, right? Don't focus on the vehicle. You can actually use other things instead of the insurance. So someone would say, like what? Well, there's actually a strategy that some of my clients are implementing and executing in tandem with this insurance. And what they do is they position gold in segregated vaults in the Cayman Islands. And then they would get collateralized loans secured by their gold the same way they do with their life insurance. So they would get 75% of the value of their gold holdings. So let's just say you have $100,000 of gold in a vault in the Caymans. They would give you $75,000 at, like, an interest rate. I don't know if it's 6 or 7%. I don't know what the rates are currently, but it's the exact same thing where you are the banker. You have positioned capital in gold. So your gold's there. It increases in value as most currencies devalue. You get to then extract liquidity from that gold, if you want to put it that way, to go buy another hard asset such as real estate or buy a business or something like that that's revenue generating. And then you repay that loan, and this is now your system. Instead of just going to a big commercial bank, getting a loan and getting nothing from it, you've built a system now as part of your family office structure. So yeah, this can be, and I mean, the other things, you could do this all over the world. Legacy assets doesn't cost you any money, just time. You could set that up. Legal, tax, and insurance structures, you could do that all over the world. The family banking I just shared, you could do it with gold. The asset management part of it all over the world, and the family mastermind. I'll share another thing too. This concept of collateralizing assets to get loans from them. You could do this with many different asset classes. So Elon Musk used Tesla shares, and he got a line of credit secured by his Tesla shares to buy Twitter. So asset-based lending, most financial institutions allow you to do that. You could use gold, silver, art, same kind of thing, like I just shared. If you have real estate around the world, I'm sure different countries have a similar product, like a home equity line of credit, like we have in the United States. Um, Crypto, you mentioned crypto and DeFi and so forth. There's actually some platforms out there that will give you loans secured by certain crypto, like Bitcoin. And then also, if you think about, again, your CDs, your bonds, that kind of stuff. So there's a lot of different ways to do it. But yeah, so if you're in the United States and even in Canada, they have something very similar to the US. You could do this strategy, but even if you're not, you could just use other vehicles, but have the exact same strategy.
I like that. Thank you for including that for a global audience. And I was going to ask you about crypto as well, because I know, especially now, not with altcoins, but with the price of Bitcoin right now, there's a lot of lending going on. My issue with the lending is usually on centralized exchanges, which is not where I like to keep my money. So that's kind of up
Yep.
to what your own risk is. But to me, this sounds similar to the buy, borrow, die strategy.
Yes. No, it's very, very similar. And there's actually a Bitcoin backed life insurance company where everything is denominated in Bitcoin, that's out of the Caribbean. And they're fairly young. It's a new startup backed by a lot of folks, but there's already a Bitcoin vehicle, which I think I'm speaking on, like, I'm not 100% sure on this. The last time I spoke with them, it was only available to clients in the United States. I know that they were rolling it out to Europe and other different countries. I don't know where they're at currently, but yeah, I mean, that's going to be an option for folks too. So again, back to the international audience, that there might be a solution for you, and that's an insurance-based vehicle where it's Bitcoin-backed insurance, where same vehicle, a whole life policy where you deposit Bitcoin in it. Your Bitcoins, your Satoshis build up in there. You can get a line of credit against your Bitcoin value and your holdings. And when you eventually pass away, there's a Bitcoin death benefit that's paid out to your beneficiaries. So there's some very, very unique and interesting things happening. Exciting stuff. So the world is changing, and there's companies coming in, yeah, that's adapting to the changes.
That's wild. I love that. Love to hear that. Okay. So we've covered a lot in terms of the banking, the investments, what that looks like for family offices. But before we end off, I feel like I need to ask you, you've been in the podcast game for so long. What are some, I mean, for me, I've been doing this since 2021, 2022-ish. So it's been a few years. And I have certain episodes, certain pieces of advice that just always stand out to me and in a way have kind of changed the trajectory of how I see my life and what I want that to look like. So I'm curious if you've had any of those moments for you that are standing out right now and some of the lessons that you've learned along the way.
Oh, all the time. I would say that this is one of the best things that I've ever done in my life, looking back now. And it wasn't intentional. It wasn't like I was like, oh, I got to start a podcast and build you know, I, and I'm very organized usually with business plans, strategy, what do I want this to look like, and so forth. And it did not start initially like that. The one thing that I was intentional about was the medium. I wanted to record a podcast, and the reason why I wanted to do that was it didn't compete with anything else. So if you listen to a podcast, you can drive, you can work out, you can work, and as opposed to a YouTube video where you don't necessarily get to, you got to watch the video basically, right? So you can't do the other things. So that was the one thing that was intentional. But back to your question, so what t- things that have stood out? Oh man, there are so many. I had someone on my show, and this is 2016 we're talking about now, early 2016, that basically told me at that stage, like, you should look into Bitcoin. And I didn't even know, like, I I was part of this newsletter group, Foundation for Economic Education. But anyway, I read about it, I understood what it is, and I love to study money, monetary history, all the stuff, how the money works, basically. So it was intriguing. But the person that I interviewed on the show is like, you should just buy $500 worth of it, set up a wallet, and play around with it. It's going to blow your mind. So that was a pretty big moment right there in 2016, because that was basically Bitcoin was around 600 bucks at that time. Um, and I wouldn't have really, if it wasn't for my show and my guest, because he's like, no, 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 you have to check it out. Like, go onto an exchange, buy some Bitcoin, buy like 500 bucks worth of it, transfer it over to a wallet, set up another wallet and play around with it. It's going to blow your mind. So that was definitely one of them. I think the other one was just interviewing folks that um, are all over the world. They've had their journey. And the person that I interviewed at that point was that told me about Bitcoin. There's like, no, 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 you got to check into this. Was Jeff Berwick from the Dollar Vigilante. Then I interviewed guys like Doug Casey and Jim Rogers. That very, very interesting individuals that have had a long life and had quite some adventures. So learning from them of what not to do, that has been incredible. You can learn a lot from other people's mistakes, because I would always ask them and said, look, if you guys were me, like, what would you guys do or not do? What would you make sure that you would not do if you go back to, someone in their 30s, and say, all right, here's the big booby traps that you're going to face in the next couple of years that I wish I dodged, but I didn't. And if I could go back, this is what I would change. So those guys were incredibly helpful. And then also, I would say, like, the other thing that's incredible that I learned so much too was just of like how important actually like the legacy piece was. And I started my show before I had children too, before I was married and had children, and that came along the way too. And that stuff, I learned a lot about people, and your mindset kind of changes a lot when that starts to happen. So that was very, very fulfilling. But yeah, there's been some times where I can point to, that Jeff Berwick Bitcoin moment. I could point to Jim Rogers where he's like, well, if you only invest in 5 things, like what would you invest in? He's like, you could even double that, 10. Just 10 in your entire life, what would it be? And I'm like, wow. So that's a good one. He's like, you can only pick 10. So, and also if you need to invest for the next 100 years, what would you invest in? Like, wow, that's something that's going to stick. Because the person that used the example is like, think about it this way: if you asked me in the early 1900s to buy like a couple of blocks of real estate in downtown Manhattan, you would have been okay for 100 years plus, right? So that was kind of the example. And I'm like, that's a good one. So what's like the next 100 years? Like, what is an investment that's kind of similar to that, right? And it could be any investment. It could be a type of business, an industry, real estate, that kind of stuff. But I think like those are the ones that really stood out. I've had so many moments like of just mind blowing stuff where I'm like, my mind's just completely blown. Tax strategies, living overseas, different types of passports and entities, like, and I keep learning. It's been exciting.
So interesting to hear. And thank you for sharing that, to hear your concise snapshot of some of the key things that stand out to you. I will say, and I'll try to articulate this concisely. And with the work that we do in the business and relocating clients and families offshore and their businesses, it was a really interesting mindset shift for me. And it really made me realize what a lot of Western governments are doing, realize more what a lot of Western governments are doing in penalizing the wealthy, and the mindsets that they're trying to bring the middle class into to penalize the wealthy. So he was a multimillionaire. He was in software. He had various different businesses, but he had a few acquaintances who were, I guess they would call themselves billionaires. And he said, it was just a very small note in the podcast, and it always stuck with me. He said to me, do you think billionaires enjoy getting divorced? And that is just, I mean, it's something that you can think about, but to articulate it so concisely in one short sentence, because he had been around these people and met them. And it really just made me realize, like, wow, a lot of these people, again, you can never generalize, but a lot of these people work so hard for what they have and the wealth that they have built, only to have other areas of their life, sometimes, not always, but sometimes going downhill in the long term. And
Yeah.
wow, and governments are trying to take this away from people who are dedicating their lives to their businesses, and their families are being taken away from them because they're so dedicated to what they're doing. And it was just a very interesting mindset shift for me. So I always remember that more as a piece of life advice and also capitalist advice, let's say.
Yeah. No, it's true. And a lot of my guests too, they're capitalists, and they money goes where it's treated best. So it's moving around, and it's moving around a lot right now. But yeah, that's the other thing that's been incredible for me. Also, just from my coming from Africa, right, in South Africa, and we saw what happened in Zimbabwe, for example. I was in university when all this stuff started to happen there, and and obviously went from Rhodesia to into Zimbabwe in the early '80s, and then they've had a lot of turmoil there and civil war and all that kind of stuff. And the same kind of mindset that is spread around through a lot of revolutionary movements in Africa made it like really started to come into South Africa and really started to get ramped up there. And then it's just incredible when you come to the West and you travel overseas in Western countries and you start to see elements of the exact same stuff that you're like, wow. Wow. Because all the revolutionary movements in Africa, where a lot of this stuff comes from, they were all trained back in the USSR, back in the old the good old USSR. And then went to, you had the revolutionary kind of like movements in Asia and then Africa. They were all trained there, and then they went back. And then it's just crazy how some of those ideas have now made it to the West. They not only made it, but it's kind of now part of our daily life, if you will. So yeah, that's been also like crazy to see just from a global perspective and growing up in South Africa and understanding all the other things that's happening around Africa.
Yeah, that's a really interesting perspective that you have, having seen that firsthand and then seeing that shift to many different corners of the globe. So, MC, thank you for being on this show. I feel like we touched a lot of different topics, a lot of wealth building, wealth preserving strategies, and then also some of your own insight into your entrepreneurial and podcast journey. So, thank you for being here. Where can people find you in the business online?
Yeah, thank you so much. So all of the podcasts that I've done is at cashflowninja.com, and you could just find it at Cashflow Ninja. And then the stuff that we talked about, the family office structure, infinite banking, how to be your own bank, they could actually go to getwealthyforsure.com. I have a book called Get Wealthy for Sure, which was a pretty bold statement at that point. But when I explained to people the strategy of banks and how you could do that, they're like, oh, that makes sense. But at getwealthyforsure.com, we're giving away a physical copy of our book. All you have to do is pay for shipping and handling. So just go to getwealthyforsure.com and request a copy of the book. And then there's also other videos that we share the strategies. And also, if you want to book a call with myself and my team, there's a link on there for you as well. But thank you so much for having me.
You've just listened to the Worldwise Wealth Podcast. Visit our links in the show notes below or at worldwisecapital.com to learn more about how we can assist in your borderless diversification journey. Thank you for joining us, and we'll see you in the next episode.